Purple Innovation stock is down about 85% from its high. So in today's video, I'm going to talk about whether it's a good buy right now, because if something is down 85%, you should always take a look at something to see if you want to buy it now. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks, which are ignored and underfollowed by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com as a free resource to make you a better investor. Now that a lot of technology or growth stocks on NASDAQ or New York Stock Exchange are down by a lot, like for example, Purple Innovations, which is down 85% from its peak, it makes it an interesting place to look for bargains and see if those opportunities are for real, if we want to get involved. So Purple Innovations is a company that sells mattresses, mattress covers, pillows, things like that. So pillows, mattresses, let's think about that. And I'm sure many of you have heard their commercials on TV. Purple Innovations has been somewhat of a popular stock among retailers, and I've seen some people do analysis on it. Of course, when the stock was much higher, it obviously didn't turn out to be that well, considering that the stock is down 85%. But let's take a look at it to see if it's a good deal right now, because we all want to find good deals, right? I always say, when you look at companies, to put yourself in the shoes as if you were running this company or as if you were going to start a company like this. Think about this. You have a pillow or mattress that you're selling. Obviously, lots of competition. Everywhere you go, there's pillows, mattresses, lots of competition. So that's number one. Let's say you're going to have it manufactured somewhere. If you're in the US or Europe, you're going to have it manufactured, let's say, locally, or you can have it manufactured in China or where the labor costs are cheaper. So you have it manufactured. Let's say it costs you $50 to manufacture it, and let's say you're selling it for $100. Your gross profit is 50%. Not bad. Purple Innovations gross profit margins are between 40 and 50%. So let's just say it 45%. You sell it for 100, it costs you to make it 50, you have 50% profit margin. Yeah, that's a really good, very good profit margin. Pretty decent. And you might come to a conclusion like this. And if you did, you would absolutely be correct. But you see, what would it take for you to generate sales? Because believe me, when it comes to mattresses and pillows, nobody's knocking on your door, right? So what would it take for you to sell it? You'd have to advertise it. And you'd have to advertise it a lot on TV, on radio, podcasts, internet, marketing, whatever. If you don't advertise, you don't make any sales. So right away, from me thinking about it, it wouldn't be an easy business, okay? Because you don't have any brand awareness. People don't really care about the brand. Like when people buy a car, they might care about the brand. When people buy clothing, they might be like, oh, I want to buy a certain brand. But when it comes to a pillow or mattress, they don't care too much about brands. And yes, I know that all these pillow companies are saying that this pillow is going to make you sleep better, you're not going to have back pain, your neck is not going to be sore and all that. Well, they're just trying to sell you on it. At the end of the day, you don't really care about the brand. So it's going to be somewhat expensive to create those sales. So even though the marketing expense is outside of the line of cost of goods sold, right? It's below the gross profit. The marketing spend is going to be huge. Like, I don't have to look at their financials. The marketing expense is going to be huge. And not only to sell, but to also grow, you're going to have to keep increasing that marketing expense. That's just the reality of that business. So right there, from the start, if you understand businesses, if you ever did start a business or try to sell something, you know that. If you just went to an MBA or you just, learn how to read financial statements, you don't have that in your head. You never experience it. It's just like, oh, you look at the numbers, the revenues are growing, yay, the revenues are growing, we're gonna buy it. But if you did something in business before, it's like, what does it take me to generate revenues? Well, I'm gonna have to spend a lot of money on marketing. And as a result of this, those revenues are not very high quality revenue. They're just not. I'm gonna look at more than 1 year. okay? So if I look at 2017, the revenues were close to 200 million. And they spent about 111 million to produce it. So the gross profit was 43%. And that equated to about 85 million. Remember the number, 85 million in gross profit. That's before marketing, okay? How much did they spend on marketing? So remember, 85 million, they spent 79 million on marketing. 79 million. That's 93% of gross profit that they got. They had to spend it on marketing. So what's left? It's tiny. It's tiny, tiny. What would have happened if they didn't spend that money on marketing? I mean, the revenues would have gone to zero or close to zero, because this is not a recurring revenue model, right? I mean, how many times do you buy a mattress? How many times do you buy pillows? I mean, one time, and then you're not going to do it a lot, right? So they have to keep finding new and new customers, and every January they start from zero. Unlike if you have a recurring business model, every January you don't start from zero, you simply add on more clients. That's a totally different business model, totally different quality of revenue stream. Now, if we go to 2018, the revenues of course grew. That's what got people excited about this business. They were 286 million, and then about 60% of it was to produce it. So their profit margin went down to 39%. So gross profit was about 112 million, gross profit. And how much did they spend on marketing? So 112, and they spent 104. So again, 92% of the entire gross profit goes back into marketing and finding new clients. It's like you're swimming in an ocean and you have to keep spending the marketing so that you don't drown. Let's go to 2019. In 2019, the revenues went to 428 million. Whoa, that really got people excited. And the gross profit margin went up. So it was about 44%. So gross profit was about 188 million. And how much did they spend this time on marketing? So 188 million, and they spent 142 on marketing. So only 75%. The other 2 years they spent over 90%, and this time they only spent 75%. So that's better. But that's awful to be forced to spend 75% of your gross profit on just marketing, just so that you don't drown and then keep growing those sales. 2020 was a good year for them, because think about this. 2020, everybody is stuck at home, right? They're remodeling, they're sleeping more, taking naps and all that. So 2020 was a good year for them. Gross profit margin was a little bit better, 47%, where the prior year was 44%. Revenues were 648 million. Based on the gross profit margin, 305 million was the gross profit. And how much did they spend? 188. Only 62%. Don't let that 62% fool you, because again, 2020, it was a lot easier to sell pillows. People were at home, they were watching TV, they were sleeping more, taking more naps, they were more open to those kinds of transactions. So that's why that number was lower, but still 62% is a lot. But now the pandemic is over. So now what's happening is that they are going back to, they have to keep spending this money to maintain the level of revenues. And then for the 9 months of 2021, the gross profit was 230 million, and they had to spend 163 million, or 71%. And the most recent quarter, they had to spend 80% of gross profit to be able to generate sales. When the stock was at the peak, the market cap was $3 billion. So in other words, it was trading at 6 times revenues. But now again, what kind of quality are those revenues? Very low quality. Yes, the gross profit margin is great, but the marketing expense makes this whole business model such a awful and below average business. So to pay 6 times revenues for those kinds of revenues, that's a pretty steep price. Even today, the market cap is about 400 million, so it's trading at less than 1 times revenues. But again, you tell me, forget about the hype, forget about who's buying the stock, forget about who's talking about the stock. Do you want this kind of business that has no brand awareness. There's no switching costs. Anybody can buy whatever pillow they want. There is no network effect, meaning more people want to buy these kinds of pillows because more other people are having those pillows. The competition is unlimited. As more people are producing those kinds of things, margins are going to compress. Even gross profit margin during the most recent quarter fell all the way to 36%. And you see why? Because now the pandemic, people are not at home as much, they're not watching as much TV, so they have to discount the prices for those pillows or mattresses to maintain a certain level of revenue. Not only do they have to discount the price, which makes the gross profit margin collapse, they have to spend more percentage of the gross profit in order to keep selling that. And now, I'm not even talking about general administrative and also research and development or pay interest on some debt that they have. I'm just talking about gross profit margins minus marketing. It's already a poor business. And now people were talking about this name, and people probably are still talking about this name because they like to say, well, it's growing. Okay, so what that it's growing? You see, at the end of the day, the idea behind growing is that the company grows up to be something that is profitable. Now, what kind of profits is this business going to have if so much of gross profit has to be spent on marketing just to keep you from drowning? Like, what do you think is going to be left over at the end of the day for cash flow? Because at the end of the day, the company has to mature and the company has to generate free cash flow or net income, or otherwise it's pointless. And you see, the way I see this business is that some businesses are just better to stay private. Some businesses are just not worth growing revenues because those revenues are not worth much. It doesn't matter that it grows if the revenue stream is low quality and it barely makes you any money. It's like a Ponzi scheme. They have to keep growing, and as long as people see that growth, they're gonna ignore the bottom line. But eventually, the bottom line has to show up. So when I look at these businesses, I look at them and I first ask myself, do I like this business? Am I interested in this business? In this case, I don't like the business. I don't like the fact that there's so much competition. I don't like the fact that they have to spend so much money just so that they don't drown. They have to spend so much money to generate revenues. I don't care that it's growing because I know when it's going to grow up to be a mature company, I don't like what it's going to be. So for me, whether this business trades at 6 times sales, 1 time sales, 50% of sales, I have zero interest in it, no matter what the price is, because I don't like the business. And the only way I'm going to make money on it is as if other people get hyped up over it because the growth shows up, if other people like it, because they're going to ignore the business fundamentals. For me, the business fundamentals are everything. If I don't like the business, I don't like it at any price. So that's it. For me, it's a no matter what price. Thank you for watching.